right, today's hot picks focus is on sustainable investing. And as we know, there's all kinds of ways to get exposure. You can invest in green technology. You can even invest in some oil and gas companies, depending on your definition of sustainable investing. Today, we're focused on sustainable infrastructure. Rob Lauzon is CIO at Middlefield Capital, and he joins us now. Rob, you cover a lot of things. You could talk about a lot of stocks. Today's lens, though, is about sustainable infrastructure. How are you defining it? What are the parameters you put around this sector?
Yeah, so infrastructure is essential services that we use every day. So think of it as roads, bridges, buildings, data, renewables, basically getting your natural gas into your home, your electricity. So sustainable infrastructure is essentially doing all those same things, but providing it in a clean and ethical way.
And do you have a thesis? I assume that leads to outperformance.
Yeah, I think the main cause for the outperformance is really the policy and social push to make it happen. So we had the IRA, the Inflation Reduction Act, recently in the US, and now you've got other countries, Canada, Europe, companies within those countries complaining that things are shifting to the U.S.
Yes, yeah.
Parkland canceled something today because it wasn't competitive to what the policies are in the U.S. So Canada needs to get their act together. There was a battery company in Europe that's moving stuff to the U.S. So that's a positive, because I suspect we'll have an IRA-like policy. And there's lots of positive policies in Europe already, but more to come this year.
Yeah.
So you kind of have this red carpet of tax incentive policy to allow the technology, the innovation within sustainable infrastructure to happen for companies and for them to invest in modernizing the grid and things of that nature.
So does TransAlta fit in that? It's a stock that struggles over the past year. It's your first hot pick. How does that fit into the thesis, and where does outperformance come from?
Yeah, so two things there. So where does it fit in? TransAlta used to be coal.
Yeah.
It has no coal. It is all natural gas fired and hydro. And hydro is the cleanest way to produce power. About 40% of that company's value is hydro. And I think that's, to answer your second question, that's where the opportunity is. Some of the parts of this company is in that $15 to $20 range. It was at $15 last year. It's pulled back here, not because of earnings. They had great cash flow last quarter, and they are essentially banking cash this year. What's happened is they have I'll call it a drop-down company, a yield co company called TransAlta Renewables.
Yes.
Which is a bit stuck, I'll call it. Payout ratio is too high. They need to do something with that. So the market thinks that they need to, and the company has stated this on their conference calls, at some point we may need to merge the two companies together and do it in a fashion that's positive for both sets of shareholders. So if TransAlta is the buyer, no one gets excited about, so the buyers have stopped on that stock. Once this happens over the next year or so, could be quicker, could be later, then that $15 to $20, Brookfield owns 13% of TransAlta. And I think Brookfield likes TransAlta because of the hydro assets that it has. So I really think from a stock picking standpoint, if you can get it in the $11 range where it's pulled back to this year, is quite interesting. And if you hold it for 2 years, I think you're going to have, 30% plus returns, which is quite good for a utility-like stock.
You go abroad as well when you think about this place. Solar Edge is your second pick. It's an Israeli-based company but trades in the U.S. What's the play here? What's the opportunity?
So this is more of a clean tech company, no dividend. It grows at 25-30% a year. It helps optimize the power that you get out of your solar panels and all of the solar projects.
It's not putting those panels on for you.
That's kind of commodity.
Yeah.
What they do is they take the power, and with their software and semiconductor and their inverters and their battery storage, squeeze more efficiency out of it.
And who buys that? The maker of solar panels or the consumer themselves?
The consumer will in their home. So if they've got solar on their roof, this makes it more efficient to power their home. So there's residential buyers, and then there's commercial buyers for commercial projects, for data centers, things of that nature. So it's twofold. It's in North America and in Europe. And I like that because you get a little bit of a diversification. And I think there's another leg to grow. If Europe does an IRA type of policy proposal later this year, that will help SolarEdge over its competitor Enphase. We like them both because Enphase is more North America. SolarEdge, you get a little bit of both. So no dividend. The stock's either up or down 3% a day, so a little more volatile. But think of it as like a technology stock for sustainable infrastructure.
And I'm just curious, does it help on areas that are like more cloudy? So, you know, if it's not like a sunny place like California, can it help, you know, if you do have solar power, but it's not always super sunny, it helps?
Definitely with their battery storage side of things.
Okay.
So it's exactly, if you're, from the residential standpoint, your power goes out, you might have stored 8 hours of power in your basement, and you're fine. Maybe you'll need it tonight in Toronto with the snowstorm.
Yeah.
Same thing with a data center. So that's where you'll get that.
Okay, so the other one is also international, Iberdrola, which is in Spain, and you'd have to buy it in Spain, correct?
Correct.
And what do you like about this one?
Well, for our global sustainable infrastructure funds, a lot of investors that are watching are looking outside of the U.S. this year for ideas. It seems to be the theme, go outside of the U.S. So here's an idea where they own a lot of transmission and distribution. Think of it as like the Hydro One of Spain. They've got projects in the UK, the US, Brazil. Those transmission grids, in order to absorb all of the demand coming from electric vehicles, solar and wind connecting to the grid, you need to modernize and harden the grid. So they spend on the transmission lines, they're able to charge a higher ROE to the regulators. So there's growth in a Dollenborn business there as the grid modernization across the world happens. So Iberdrola's, that's about 70% of their business. And they have a growth engine in their business because they are expanding in renewables and you know, providing more solar, wind, offshore wind to Spain, to the UK, to areas in the northeast of the US. So it's again, a sustainable infrastructure fund. Think of it like a utility, international exposure, a 4% dividend with, you know, 5 to 8% growth each year, which is quite good for a utility-like business.
All right, Rob, thanks so much for bringing those ideas to us. We appreciate it. That's Rob Lauzon, CIO at Middlefield Capital Corporation.